Coffee, cocktails, and cryptocurrency are all on the upswing. However, for what period of time? I'm about to become more relevant, as the cost of our morning and evening addictions is set to increase, due in large part to that blasted coronavirus. As an economist, you may become enthused or concerned about matters that are difficult for the average person to understand. This is part of the isolation associated with the patch. When the economy affects everyday people, however, social outsiders such as economists and scientists become more valuable to society. The epidemic has conditioned us to accept epidemiologists pontificating in the media, even if the epi word is difficult to pronounce. Notifications that the price of a cup of coffee or a cocktail is about to increase should be greeted with excitement by the average person. These price increases help ordinary people grasp the economic concept known as supply chain difficulties. These are the actual changes that will increase another economic term in the next months, namely inflation. This highlights another economic concern shared by the majority of consumers/borrowers: rising interest rates. These price increases are critical to the central economic issue over which Wall Street and the global money markets are concerned, namely whether these price increases or inflation are temporary or permanent. Optimists argue that the impending inflation increase will endure for a brief period while the world's producers overcome the virus's limits. Pessimistic analysts predict that this will continue to drive inflation higher for an extended period. If these forecasters are correct, interest rates will rise sooner and more rapidly than currently anticipated. This will have an adverse effect on stock prices, high-yield investments, job creation, and economic growth. It is truly worth hoping that the inflation spike is transient and that strong economic growth occurs without concern for price increases. According to the ABC, Restaurant and Catering Industry Association CEO Wes Lambert warned consumers may spend up to 20% more than in the past. Costs of goods and labor are driving price increases, demonstrating the impact of travel restrictions, border closures, and the influence on production. Importers of food products from all over the world are paying a higher price for little items, such as the wrapping paper used by food manufacturers. Then there are the consequences of pay increases, with the head of the Restaurant and Catering Industry Association claiming that approximately 100,000 jobs are currently vacant. This might remain the case until international workers and travelers return, which could take until mid-2022. States that remain closed for an extended period of time should face higher price increases than those that open sooner and may thus recruit foreign labor immediately. Tanya Hanouch, owner of Wolf and Malone Restaurant, spoke with the ABC about the pandemic's impact on her establishment. In early 2019, we were seeking for kitchen help, and I would post an ad. And we would receive between 20 and 30 emails in a single day, she explained. Hanouch posted the same advertisement nearly 2 weeks ago, including a 25% hourly wage increase, yet not a single applicant has applied. I believe that with our internationals gone and people remaining hesitant to return to work, it's a catastrophic scenario for many of us in hospitality-seeking workers, she explained. And if this shortage and price problem persists well into 2022, one group of investors who will remain unfazed by it all will be those invested in Bitcoin and other cryptocurrencies, with both Bitcoin and Ethereum reaching all-time highs this week, though the former fell about $2,000 overnight to $66,685. However, its price has increased by more than $36,000 since June. This is a bizarre asset that has gained acceptance in recent years, particularly as financial institutions such as the CBA have made it simpler for its consumers to acquire, sell, and store cryptocurrencies. While it will take time for these new currencies to be accepted and understood, they will eventually become an integral part of our monetary system, and regulation will eventually make their acceptance simpler. Until then, there will be plenty of people gaining and losing money on cryptocurrencies, but those that got in early are significantly wealthier than they were before to going long crypto and will easily weather the rising inflation caused by the coronavirus. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.